Good morning, ladies and gentlemen, and welcome to the show on this 24th of May, 2021. Glad you guys could tune in. Glad to have you guys here. You know what? The consensus is not in yet that it's going to be inflation. You know, an awful lot of investors. Oh, you'd be amazed how many people think that the system's going to deflate. And so they're still investing with that mindset. And they're saving their dollars. They're not spending. They're trying to get out of debt. They're trying to do all the things you'd do if you thought it was going to be a deflationary type of a crisis that's coming. There's going to be a transition when they all see, hey, you know what? This is not going to deflate. This is going to continue to inflate. They really see that. It becomes obvious to them. There's going to be a shift occur in the mentality of not just investors, but everyday people are going to start to say, hey, you know what? Prices are going up fast on everything. I need whatever I need. You know, I'm going to go out and I'm going to buy it. This is going to compound the inflation that's coming very soon. And I expect this shift to occur pretty soon, probably within the next 3-4 months, you know. Let's get in there right now, and we're going to take a look at the charts. We're going to take a look at the silver price today. You know, 27.75. Now, the impact of inflation hasn't really hit gold or silver yet. And what's the impact going to be? We're going to see prices going up on gold and silver. A steady increase. Not this sort of thing that we've been going through the last number of months, where the silver price will go up 60 cents. And then fall 60 cents the next day. And we're not going to see that. What we're going to see is it go up and stay up. And then it'll take another leg up and stay up. And then another leg up and stay up. That's what we're going to start to see. And then it's going to increase faster. You know, because this is far from being in a bubble. This is one of the only asset classes that is in short supply in the world, not in a bubble. Now, I consider cryptocurrencies to be a commodity. That's how I consider them. We're going to take a look at cryptos right now, and I'm going to talk about cryptos just for a minute here. You know, cryptocurrency was in a bubble when Bitcoin was like $64,000, $63,000. It was in a bubble. Yeah, it was in a bubble. But in any commodity, if all of a sudden you see prices slashed in half, I'm sorry, you're not in the bubble anymore. You get a commodity and they slash the price in half, I'm sorry, the bubble's gone. You know? Like if you had gold right now, and people out there say, gold's in a bubble, you know? And if you saw gold cut in half, like where is it? $1,800? If you saw $900 gold, would you say it's in a bubble still? No. Well, Bitcoin's no different. It's been slashed in half. But it did it quickly. And so people are probably out there, still saying, oh, crypto's in a bubble, crypto's in a bubble. The bubble just got popped, guys. It just said it happened fast. It happened maybe while you were asleep and didn't notice it, but the bubble's been cut in half. And now what do we got? Now we got a commodity here that is not in the bubble anymore. What we're looking at, Bitcoin price right now is 38,000, and it was like 33,000 last night when I went to bed. Now it's 38,000. So it's starting to heat back up. Not to say it can't go into a bubble again. I think if you see Bitcoin back up at $60,000, $70,000, well, the bubble's reinflated itself again. But, you know, cryptocurrency moves so fast, it's so volatile. You can see now, you can lose half your money overnight in crypto. Now, I don't think that's going to happen with gold and silver. Can you imagine the silver price, you know, or gold price getting cut in half overnight? I don't see that, but it can happen very quickly and easily with crypto. On the other side of that coin, though, you can make an awful lot of money with crypto because it does move so fast, you know. Take people, for instance, people that are buying in right now. Bitcoin could go back up to 60 grand. And say you bought it 33 grand, well, you've doubled your money. And it could happen rather quickly, within a few weeks. I mean, look, just since last night, back up to 38,000 from 33. That's quite a little jump, and so this is a wild west of finance, the crypto industry, you know. And of course, Bitcoin has taken a lot of heat lately about its power consumption, and rightly so. Bitcoin is old school when it comes to cryptos. It's old technology when it comes to cryptos. You know, cryptos are advancing so quickly with their technology base. Now Ethereum, from what I gather, has become a coin that is not open ended any longer. It's got limits on how many there's going to be. They're limited. It's not like we're going to make as many as we want. That's what it was a few years ago. They didn't have an upper limit to the Ethereum. I think don't they have an upper limit now? Pretty sure they do. But Ethereum, could in the end overtake Bitcoin. It's very possible. But then something could overtake Ethereum later because Ethereum has its flaws too. It's kind of like first gen technology as well. So our top coins we're looking at here, most of them are like first gen uh, technologies. I'm just waiting and watching because I think that something's going to come along in the crypto space. It's going to be next gen technology and is going to be able to to cover transactions worldwide instantaneously, like Visa does, MasterCard, and these different uh, credit card companies already do. They can cover like 100,000 transactions in less than a minute. It's just like, and that covers all these little transactions, microtransactions across the internet's where we're going next. Payments of 25 cents, sort of thing. Uh, Quickly and verified and everything across the internet. That's where we're going. Okay, let's take a look now at Dow Jones Industrial Average. 225, it's up today, or 0.66% at 34,433. There was no real reason behind Bitcoin getting cut in half. Okay, they said China, whatever, but the market's starting to go down and starting to become volatile and bully and bearish all of a sudden. There was no real big reason behind it other than it was happening. you know and they said the markets are going to be very volatile this week. Well, I think maybe not. I think we might have come through whatever hiccup it was, and now the markets might stabilize this week, and so might Bitcoin, and Bitcoin might start slowly treading upwards again. uh let's take a look now at oil. 65.26 today. And oil is up $1.68 or 2.64% on the day. And I still think oil's heading to $70 or higher. Let's take a look now at the MOVE index. The MOVE index has been descending. This is a descending chart, and so we're getting a lower and lower MOVE index. Now that's good because the MOVE index is stability in the credit markets. We see the MOVE index go way high, then the credit markets are becoming unstable. Bonds and rates today. What we're looking at is falling yields. Some of this money might have come out of the cryptocurrencies. Enough to drive the 10-year down into the 1.5s from the 1.6s. So we're at 1.599 right now. We're down 3.3 basis points on the 10-year. We're down 4.1 basis points on the 30-year at 2.29. And so, there you go. Investment in these bonds is like a vote with an investor. It's like a vote for deflation. And it's almost hard to believe that there'd be that many guys still out there thinking, hey, this is going to deflate. The system's going to deflate. But there are. you know? And I'm not saying that deflation's not an option. We could get a little deflation before we head to the real hyperinflation. And the deflation's going to come from the Fed panicking, the Fed saying, hey, we got to do something about this, and them going out there and trying to taper or trying to tighten, you know? And them starting to turn the screws a little bit. And then the system could start to deflate some. And then the first thing that's going to happen is the system's going to start to keel over and die again on them. It's almost like a doctor. He says, hey, you know, I saw my patient's eyeball moving a little bit there. I know we've had him on life support for 6 months now. Maybe we can remove life support. And so they go to remove life support, and the patient starts to go into cardiac arrest and everything else, and then they all panic and run back in with more life support than ever. That's the way with the system right now. you can't tighten. You can't tighten. It's too weak. The system's too weak. But when they see the inflation coming, they might say, hey, you know, we got to tighten. We're going to have hyperinflation if we don't. And they start to panic. Well, then they'll panic in, then they'll panic back out again. Do they realize what a situation that the world's in right now? You know, the world's financial system. You're damned if you do and damned if you don't. Meanwhile, the best way is to chart a steady course, because that's the way you're going to drag it out the longest before it finally gets to this crisis. And we've been charting a steady course for like the last year, 2 years, whatever. You know, if they start trying to tighten, they start trying to mess with it, they're just going to make it worse. The best way is to chart that steady course and keep charting that steady course, and we might be able to squeak out a year or 2 more years or something, or maybe even 3 more years before the real crisis we start to grind in and we get boxed into that corner where we can't escape it, and the whole thing starts to flop over. It's going to be a mess at the end. There's no avoiding it in the end. There's going to be a mess. But how much more can we squeak out on this side of the mess? Well, if they don't panic and they just play it cool, then they might be able to squeak out more. Keep a nice steady course. They might be able to. It's like a ship heading toward Niagara Falls. It's like, you know, and if you keep a nice steady course, you don't panic or anything. There's no turning the thing around at this point. It's too big. It fills the whole canal. You can't turn it around. It's like that ship that was caught in the Suez Canal. You can't turn a ship around in the Suez Canal. It gets caught on either bank. And that's the way with the system right now. You got to stay with the course, even though the course is leading to a falls. You know, this is a total mess. And this mess was put in gear, actually, back in around 1914, when they met at Jekyll Island, and they arranged the whole thing. They put together a Ponzi scheme that would have to have an ultimate conclusion. But I guess they said to themselves, oh, it'll be 100 years from now. Let's not worry about it before we finally get to that point where the Ponzi scheme comes to an end, you know. And let's just whoop it up and have some fun until it ends, you know. We'll all get rich on the Ponzi scheme. All of us. But now it's come to its end. They've met the final conclusion. It's here now. Almost here, you know. And we're reaping the results of all that. And there's no way of straightening it out. It's too big to straighten it out. It's going to keep going until it hits that final conclusion of hyperinflation. And then they're going to have to do something at the end of the hyperinflation. They'll be forced to do something because it'll be ripping the system apart. Can you imagine, like, $10,000 for a can of beans? You know? Imagine what people will be out there. Yeah, maybe they'll put your wages up. They might put your wages up to $5,000 an hour. But it's $10,000 for a can of beans. And it used to be we only paid 5 cents for a can of beans. And our wages went further back then. You know, it's if you adjust things now, you have to work longer for less. It doesn't matter what the money, how much something costs, and how much you make. Like if you were to compare wages for wages, apples for oranges, going back to the 1950s, if you told them how much, if somebody was from the 1950s, went in a time machine till now, and you told them how much you make, they'd be pretty damn impressed. Wow, you're making a fortune. They'd say your lifestyle must be great with that much money you're making, with your new, what, $15 an hour minimum? They'd say, man, you must live like a king on that. You say, well, no, I don't. I can't make ends meet. My wife works, I work, everything works, and we're still going behind. They'd say, well, what's up with that? How come you're going behind with all that money? It's because prices have went up on everything higher than you see. So it's all relative. How much you make is all relative to how much things cost. Ultimately, in the end, evidently in the 1950s, even though people made a lot less money, everything was so much cheaper that they could get by on just one person in the family working and still save money. Now you got two people working and they're going behind every month. And it's going to get worse. In the end, you'll need 20 people working and you won't even be able to buy a sack of flour. And this is going to have a direct effect upon the people ultimately in the end when prices go that high on everything. And the effect is they're not going to be able to make ends meet. And then they're going to get mad. And they're going to want government to do something about this. And government doesn't have the answer. And so they're going to expect an answer. And all this goes back to what they did at Jekyll Island. They shot the future generation of themselves, what the future generation would be. In other words, they were in charge. They were the big wigs. They were the big shots. And they went down and decided what was going to happen at Jekyll Island. But their descendants of them are here now. They shot their descendants in the foot because they're going to take the blame for all of this. Is the people that are in charge now. But it was arranged by those guys back in 1914. They were the ones who really did it. They set this all up. So basically, they were setting up their descendants for failure. So their descendants are basically the people that are in power now, and they're not going to get out of this mess. They're sitting square, and the bus is coming down the street, and they're in front of the bus. They're going to get under the bus. This is the people are going to take the blame. The people get mad enough and they're going to look for answers and they're going to say, who's responsible for all of this mess? And that's what's going to happen. It's just a matter of time because this whole thing is just winding down now. We'll see you guys in the very next show. You guys have a great afternoon. Bye-bye.